Coming back to property prices and expected market crash, I want to say why I think this idea has nothing to do with the reality when it comes to Dubai. Hi guys, entire world is changing now after being faced up with a problem that is not new, but the reaction of the world and society and the measures that were taken by the national governments were absolutely extraordinary. Experts are talking about structural economic crisis of liberal political forces, and end of dollar era, and as a result, a real possibility of changing of the entire world system known as Bretton Woods. I believe this is the end of fiat money era, that's for sure. The fiat money are not backed up with anything apart from the promises of the government to exchange the old money with the new ones that they will print out without any limits. The people who are keeping their money in the bank in the form of paper are at the highest risk of losing it all. And I want to go deeper into the economical political overview and want to focus on my expertise area, which is real estate. So let's talk about real estate. What's happening now? Due to lockdown, many international investors put their decision to invest on hold, saying that there will be a property market crash in Dubai, and were predicting the price drop from 20 to 50% even for planned projects. Now it's a little too early to have a full picture, but we can make preliminary conclusions as per today's situation. So to start with, the end of 2019 was quite active. In March, we saw a jump in the real estate transactions that hit a new record, and then we had a COVID lockdown that led to low investment activity. However, secondary market transactions are happening, but mostly in a form of distressed sales as a result of smart investors with cash entering the market in the right moment and taking advantage of the situation. At this time, Robert Kiyosaki made a post saying that assets that are worth investing now are gold and cryptocurrency, but I would also add real estate as well, as a way better solution to keeping the money in a bank account or investing in stock market, as we also have. Again, crypto and gold is a way to generate money, but crypto is an insecure and volatile instrument that has to be dealt with extreme care. When real estate is the golden standard of investing and generates safe and secure cash flow that in future might become digital. Coming back to property prices and expected market crash, I want to say why I think this idea has nothing to do with the reality when it comes to Dubai. We all know that economy is cyclical. However, in the long term, real estate prices increase because land is a limited resource, and there was only two exemptions from this rule: First and Second World Wars. I want to highlight two important things with this regard to make you understand that you cannot just look at the world economy and judge the local property market direction, and there are many other factors to consider. Number one, do not get confused. Real estate market cycles do not match with the world economy cycles. Usually the real estate downturn anticipates the economy downturn. And this is what we saw during these few years after the peak of 2014. Similar, the upturn comes before the economy upturn. But local markets became very different from country to country or city to city. Before the market reached its peak, it was seller's market. The demand was overriding the supply. Now it's definitely a buyer's market. However, recently supply in Dubai started shrinking. And this is what is happening now after implementation of supply committee regulate the number of new projects entering the market. Number two, the crash obviously can only happen in the situation when there is a bubble. The inflation cannot last forever and the crash is unavoidable, and this is what happened in 2008. Now the situation is completely different. Due to the national currency's devaluation, people withdraw their savings from the banks and try to secure them in real estate, gold, crypto, etc. Central Bank of the UAE decreased mortgage loan interest rates. That also has to increase the buyer's ability to stabilize the supply-demand balance. When the recession happens, it will mostly affect the rental market. As simple as many tenants will be unable to pay their rent, and this is what we see happening right now. It will affect the landlord's ability to pay off the mortgage as well. Therefore, there should be a strong government interference measures to mitigate the financial losses. The 2008 recession did not cause the housing market to go into free fall. The housing market going into free fall caused the recession. Coronavirus-induced recession is hard to give out because there is so much we don't know yet, but American property portal Zillow looked at housing market during previous pandemic and concluded that while the volume of housing transactions dropped dramatically, similar to what's happening now, prices fell only a little, if at all. I wanted to hear that phrase again. A good way to think about home buying during a pandemic is that the housing market is seemingly put on pause. Still, people who have gold funds in cash will continue buying. As far as home prices dropping during the recession, 2008 is the exception to the rule. During two mild recessions in the early 80s, for example, home prices actually increased, just as they did in the early 2000s after the dot-com bust. Home prices are less responsive to recessions because housing is an absolute need and because buyers tend to come from better financial situations that aren't as damaged by the recession. So I want to highlight some key intakes from what I said. Home values tend to rise over the time, but recessions and other disasters can lead to lower prices. Following the slumps, home values can increase in some areas of the country because of the strong demand and low supply, while other areas struggle to rebound. Potential home buyers should focus on national trends as prices vary between states and to state and cities to cities. First of all, we all need to understand the terminology. What is the market crash and when does it happen? Housing bubbles are the temporary events that can last years and are characterized by the high demand, low supply, inflated prices and high interest rates. From all that, we have only two factors right now: low demand and higher supply. The bubble situation is not there, same as increased interest rates. The trend that we saw during the latest years was end users driven market as a result of softened prices and extended payment plans and offers from the developers. What we saw during the lockdown was not decreasing the prices by the developers, but actually the opposite. Cancellation of the old post-handover offers, like what we saw from Amar, and that they're running out of availability. Now, when the investor tells me that he will come back in September and he expects to get the same property he was interested in February, he will face up with an unpleasant surprise of not being able to get any decent unit. However, there are many great deals you can grab from the secondary market, even from the new recently completed stocks, that desperate sellers are willing to sell at the price below original. But it doesn't mean that happens because of Corona. It happens because he bought his Oakland property 2-3 years ago, hoping to get a finance that he couldn't get because his life situation changed, or he was hoping for the prices to go up and he wanted to resell. That didn't happen either. Right now, with so many digital tools, you can view the property inside out from the comfort of your home anywhere in the world without traveling to that country. However, we'll still see people being hesitant, skeptical, having flippers mentality, and naively thinking that it's meant to be. If it's meant to be, it will happen. Well, we'll see. Time kills not only deals, but it kills the business. Share in the comments if you agree or disagree, and what you think about the direction of the real estate market in your country. Happy to see you again.